Hello, everyone, and welcome to The Upside. I'm Kyle Cheropita, and I'm here today with Meaghan Chandler and Cameron Bruce. Meaghan and Cam are investment analysts on the product research and product development team here at Fidelity. They are both experts on ETFs and our ETF product lineup. Welcome, Meaghan and Cam. Great to have you here today.
Thank you.
Thanks for having us.
Now, this is part 2 of our ETF mini-series. Hopefully, the audience checked out the first episode, which we aired featuring Audrey Kim and Max Naylor. They were talking about ETFs. We called it an ETF Explain It Like I'm 5. And that was part 1. They really covered the basics. And now today, we're going to take it a little step further and get into multi-asset and specifically the Fidelity product lineup, including all-in-ones. So let's start right there. Turn to you first, Cam. Maybe you could define for me, what exactly is a multi-asset ETF?
Yeah, of course. So multi-asset ETF is exactly what it sounds like. It's an ETF that invests in multiple asset classes. So think your bonds, your stocks, et cetera. And they package them into one portfolio, one ticket solution. And the motivation for them is kind of think when you're making your investment decisions, you've got to choose geography, sector, style, securities, those kind of things. And there's risk associated with those. So think your eggs in, you don't want all your eggs in one basket type of thing. And so what we do is then we'll diversify across those asset classes. And then we take on those decisions and we get to control all of the things that are complicated with managing a portfolio, like, rebalancing and trading and where to allocate where and whatnot. And then that's basically the crux of the multi-asset and why they're popular and why we're seeing interest in them right now.
Very cool. Now, before we get to the Fidelity product lineup, so multi-assets in general, have they been in the industry for a while now?
Yeah, they've been around for a while. So our product's been around for about 5 years, I think, our suite.
And but the industry before that
was much longer. So I don't know the oldest one, but it's been probably 10, 15 years that they've been in the Canadian market. So
it's a very popular product for diversification.
Yes.
Well, let's turn to the Fidelity product lineup, specifically the all-in-ones. Meaghan, let's talk about those.
Yeah, so the all-in-one suite comprises 6 different solutions, ranging from 100% fixed income to pretty much all equity with a bit of crypto. Right. And then the other 4 solutions in between kind of range between those asset classes. And what our all-in-one ETF suite aims to do is really what Cam kind of talked about. So provide diversification in a very easy way for investors. So they're diversified from asset class level, but also from regions, investment styles, market cap, all within one solution. And a great way to think about it, at least for me, is I'm not good at baking. I'm awful. So it's similar to, say, me baking my own cake versus me going to a bakery. So if I'm baking my own cake, I'm worried about finding the ingredients. Did I add butter twice? Is it cooked enough? So it's a very hands-on approach, I would say, versus going to a bakery to buy this cake. They have expertise, they have resources. So it's more of a hands-off way. So that's how I would think about our Fidelity All-in-One ETF suite. And we're definitely trying to add value and do something a bit different than other competitors out there, which we'll be talking about today.
Very cool. Your team loves their analogies, I think. Audrey was referring to smoothies. I saw one with flowers, a bouquet at one point as well.
We got a lot more coming for you today. So.
I love it. So more episodes in the future.
For sure.
Yeah. Now, with the all-in-ones, there used to be 4, right? Then we added a couple more. Was it last year?
Yeah, we've been slowly building out the suite. So we initially had 2, our balance and growth offering in 2021. We expanded again in 2022 with our all equity and our conservative offering. And then, like you mentioned, last year, we expanded again for all fixed income and a conservative income offering. So.
Very good.
Yeah.
Now, what would you say, you, Meaghan or Cam, what makes the Fidelity all-in-ones distinct from other products in the market?
Yeah, I can take that one. So a lot of the competitors on the market utilize what we would call, passive. And basically what passive is it's just replicating a broad market usually. So think, your 500 largest stocks in a specific market or index. And then to continue on the analogy and the cooking analogies, I think of passive like it's like a recipe that you follow that's in a book that 1 million different people have bought. And it's not to say it's not going to be good food, but it's a recipe that's been trodden and it's been, used several times. So what we do is we employ factor strategies, which we'll get more into, and active strategies. And then this is where we're actually taking active decision making, and we're leveraging, our Fidelity's years of investment research and experience to try and provide some edge or the potential for outperformance. So then again, I would think of this as more like you're getting like a chef curated menu, like I'm looking at what's in season, it's my style tilt.
Right.
Things like that are then maybe going to add a little bit of extra flavor to your portfolio. And then that's kind of the idea. And then we also have a little bit of a sprinkle of Bitcoin in there, which also makes it unique to some other competitors. So I think those are kind of the things that we do differently. And we hope that it provides the potential for outperformance and better experience for clients.
That's great. And that sliver of crypto, then that varies, I believe, between the different ones in the suite?
That's correct.
Yeah. What is the breakdown there?
So as of today, it currently ranges from 0.5% all the way up to 3%.
Very nice. So a little flavor depending on what the individual investor wants. Yeah. Now, something else that the individual investor often focuses on are fees. So if someone was to go to fidelity.ca and see, which they all should, and if they want to read more about the products, and if they see performance listed, is that performance number before or after fees?
It's a great question, and it's something that comes up a lot. Firstly, if you're curious about what the fee is, you can always find that on our website, again, fidelity.ca.
Yeah, there's handy product pages for
Exactly. You'll find it right at the top. And then obviously if you scroll down a bit further, you're going to see our returns. And those returns are indeed posted net of fees, meaning we've already taken the fees off of those. So if you're looking to compare our returns to a benchmark or a competitor solution, know that we've already taken the fees off. So you really don't need to worry about that.
It's quite transparent.
Exactly.
Well done, everyone. Now, I wanted to pick up on something you said earlier, Cam, and that was about the factors. Let's talk more about factor investing. Who would like to chat a bit more about that?
I can take it.
Great.
So different analogy, we're going to go with a sports team. But firstly, let's talk about what a factor is. So a factor is a measurable characteristic of a stock or a group of securities that over the long term will exhibit a certain risk and return profile. So let's say you're trying to build a winning hockey team. There's so many players out in the world. How do you narrow down that grouping of players? You can take an approach where you search for certain characteristics. Let's say you're searching for speed. You may use a metric like they can skate over 10 kilometers per hour. Maybe that's slow. I don't know what a good metric to use is, but you can use that to narrow down for speed. And that's basically how our factors work. We'll use different metrics to narrow down that broad universe. And then similar to a team approach, not every characteristic is going to work in every environment. So let's say you play a team and maybe speed worked that time, but another team, a strong defense worked. And that's similar to our factors. So when we designed the all-in-one suite, we actually took an equal weighted approach to the factors that we included, because you'll find with factors, their leadership or when they outperform kind of shifts, and it can shift kind of quickly.
Yeah, like over a year or even over a full market cycle, right?
Exactly. So by taking a more diversified approach, it can kind of create a smoother experience for the investor, but you still capture the benefits of when each factor is really outperforming by having exposure to each one.
Right. So if we're going to carry on that sports team analogy, we're in the Olympics right now. So hey, just pick the Canadian team, right? Get some Canadians on the team. Go Canada. All right. So next question I want to ask you, Cam. So you have actively managed small cap equity as an offering, as well as active and systematic building blocks on the fixed income side. So hoping you could explain a little bit more about how those two things add value.
Yeah, of course. So that's pretty common across the market, where you're going to see active management in fixed income and small cap. And then I guess just to step back and define small cap, because not everybody's going to be familiar with that. So small cap is just going to be smaller publicly traded companies. So they're not going to be your NVIDIAs and your Googles and your whomever, right? They're going to be smaller companies. And the logic with this active management, where we do more research and it's more hands-on and individualized, is they're smaller companies, so there's less research, there's less coverage of them out there, there's less opinions on them. So that can afford us an opportunity to be differentiated in that way, because it's not like those big stocks where there's thousands of people making decisions on it every day, right? There might only be a few. And then that just provides opportunity for research to really come into play. And then fixed income is similar. But the difference with fixed income is it's such a broad market. So there's differences in the way that companies issue their equity in fixed income, which we don't need to get into. But basically the fixed income market is massive and way more fragmented. And you still got to call somebody to trade a corporate bond sometimes. So having expert and active management in that space can really, really pay off. And then to shift our analogy to now tourist analogy or vacation analogy, it's kind of like vacationing in a less well-trodden place, where there's not a lot of tourist reviews or anything out there, as opposed to if you're vacationing in typical vacation spot where everything's already been experienced. People know what's good, what's bad.
Right.
So
you just wanted to bring up vacation allergies because you just got back from one, right?
I did. Yeah,
you did. You're looking good.
Yeah.
Good.
Well,
Thank you.
Yeah.
Welcome back to the cold.
Yeah. It's harsh.
Let's turn to rebalancing now. Something that happens in these funds with you, Meaghan. Why is rebalancing so important, and what is Fidelity's protocol behind rebalancing?
So with the All-in-One ETF suite, they all go through an annual rebalance. But beyond that, like a plane on autopilot, planes can naturally drift over time. Let's say there's wind, it's pushing it off course. And an autopilot will kind of step in and automatically bring the plane back to the course. And that's the same with our ETFs. So they are automatically rebalanced if they surpass a certain threshold between those annual balances.
Okay.
But what's really important about rebalancing is what you'll find naturally over time is your winners may make up a really big proportion of your portfolio, which sounds great in theory, but what could happen with that is you may no longer be aligned with your investment objective and your risk tolerance by them making up such a big proportion.
And would it be safe to say an investor picked that fund or ETF based on those factors, those characteristics?
Exactly. So as it shifts over time, it's something to consider that you should be rebalancing back to make sure you're still aligned with your own financial goals.
Great.
And obviously that can be a lot of work. So having a product that can do it for you can certainly make it a lot easier.
Great. Well, expanding on those products, I'll turn to you, Cam. We have so many ETFs we've been talking about today.
Yep.
Is it safe to say there is a perfect ideal investor for each product, or do you have anything to say about that? Which ETF is best suited for which person?
Using our all-in-ones sort of as because they're our one ticket, right? So it's hard to assign, this is going to be right for you, this is going to be right for you. But we basically have a suite from all the way from all fixed income to all equity. And basically they just range from conservative to balanced to growth to all equity. And basically you just want to think about it. If you're conservative or you're income seeking, that's when you're going to want to look at a higher fixed income allocation. So that's going to be, we have a conservative income, we have all-in-one fixed income, and then we have all-in-one conservative. So these are going to be, as indicated in the name, on the conservative side, lower risk, lower return, but more steady and more income oriented, which can be helpful for people with lower risk tolerances, or maybe you need this money in 5 years or something. You can't survive a downturn. And then smack dab in the middle, we have balanced, which is going to be more of an even mix between equities and fixed income. And then you could consider this probably still, a little bit conservative, but more on the neutral side for your risk tolerance. And then we have our growth and our equity respectively. So growth still has a bit of a bond sleeve in it, and then equity is all equity, as it sounds like. And those are for somebody like myself who I'm more interested in the long run. I'm thinking 30-year time horizon. Yeah. I'm not spending money on anything. Definitely not buying a house or a car or anything like that.
Maybe just another trip.
Maybe. And then that is sort of where that comes in when you have longer time horizons, longer risk tolerances, and then that way you can go for that higher risk return profile.
Well, that's great, Cam. Turning to you, Meaghan, are there any other notable multi-assets available at Fidelity?
For sure. So another suite we have available is our Fidelity managed portfolios. Previously, we only had them available in a mutual fund, but last year we actually expanded to offer them in an ETF series. They're similar to the all-in-ones in that they are globally diversified multi-asset class product, but a little bit different in the management. So our all-in-ones follow a strategic mix versus the Fidelity managed portfolios, or FMPs, are actively managed by Fidelity's global asset allocation team led by David Wolf and David Tulk, who have decades
many years of experience.
Exactly. Yeah. So with them, it's a little bit different from that sense, and they have the capability to overweight or underweight different asset classes based on where they're seeing opportunities from a big picture economic trend sense, but also from what they're hearing from our bottom-up portfolio managers as well. So, both suites are great. They can be solid options for you. It just really depends on, what someone may be looking for.
That's great. And they are a great team to hear from. We actually had David Wolf in the studio here with us earlier today for our live advisor show, Fidelity Connects. So I always love hearing from that group. Now, before we wrap up today, one final question, Meaghan, is there anything we didn't cover today? Maybe a few tips about the all-in-ones before we wrap up?
For sure. 3 things I'd like to leave you with our all-in-ones is they're simple, they're different from what you're going to find out there, and they're providing you diversification. So it really takes, all the thoughts of portfolio management potentially off of your plate to make it an easy process. If you're looking to learn more, there's a few ways. You can check out our website, so fidelity.ca. You can definitely tune into the other Upside webcasts, or even you can talk to if you have a financial advisor as well. So definitely do your research, see if something like this could be the right fit for you. But yeah, definitely consult our website if you're looking to learn more.
That's great, and that was going to be part of my close anyway, so thank you for covering it. We love bringing in folks like yourself to share your information with our investors, and there's plenty more information out there if anybody wants to go to fidelity.ca or tune into any of the podcasts like this. So Meaghan, Cam, thank you both for joining me here today.
Thanks.
And hopefully you two will tune in to watch part 3 of this, which is Vince and Nicole, which we're going to be airing next, and hopefully all of you tune in as well. So that's it for today's show. If you didn't watch the first episode in this series, that was the one with Audrey and Max, I strongly recommend you looking that one up on YouTube. So in general, please follow us on our socials, including Instagram, YouTube, LinkedIn, Facebook, and Reddit for more great content and the latest financial updates. You can also head to fidelity.ca's investor education section to check out our articles, sign up for the Upside newsletter, get information about the upcoming live webcasts, and on-demand videos. So whether you're learning investment basics or looking for more advanced knowledge, we can help you become a more informed investor. As always, working with a financial advisor is among the best investments you can make. And thanks for watching. I hope you'll join us again on The Upside. I'm Kyle Cheropita. Thanks for listening to, or watching, Fidelity Canada's The Upside podcast. Subscribe on your podcast platform of choice so you don't miss an episode. And if you like what you're hearing, please leave a review or a 5-star rating. Fidelity mutual funds and ETFs are available by working with a financial advisor or through an online brokerage account. Visit fidelity.ca/howtobuy for more information. While on fidelity.ca, you can also find more information on future live webcasts. And don't forget to follow Fidelity Canada on LinkedIn, YouTube, Instagram, or X. We'll wrap things up today with a quick disclaimer. The views and opinions expressed on this podcast are those of the participants and do not necessarily reflect those of Fidelity Investments Canada ULC or its affiliates. This podcast is for informational purposes only and should not be construed as investment, tax, or legal advice. It is not an offer to sell or buy or an endorsement, recommendation, or sponsorship of any entity or securities cited. Read a fund's prospectus before investing. Funds are not guaranteed. Their values change frequently and past performance may not be repeated. Fees, expenses, and commissions are all associated with fund investments. Thanks for tuning in. We'll see you next time.